This video is going to cover preparation of North Carolina tax returns for non-residents who have North Carolina income. It's the second presentation out of three. The last one talked about the full year resident tax returns. The non-resident returns are quite a bit shorter and more straightforward, I hope. And as you view this video, you can pause the video at any time to go back to a prior section if that wasn't clear, or to answer any questions or work problems that I present. So you can pause, do the problem, answer the question, and then see the results. There will be a lecture section covering the tax law and the tax layer input. There'll be a quiz, and then there'll be a sample problem using the 2020 tax layer practice lab and the NTTC workbook. There haven't been any changes to North Carolina tax law for 2021. So if you're able to handle the 2020 returns, that should fully prepare you for the 2021 tax prep. Okay, let's get started. As I said in the last presentation, non-residents owe tax on income that's earned within the state, but only certain type of income, wages, self-employment income, real estate income or gains from the sale of real estate, and gambling income. So non-residents aren't going to owe tax on interest and dividends, normal interest and dividends, or pension income, or things where there isn't a specific nexus within the state. And the taxpayer may get a credit on their own resident return for taxes that are paid to North Carolina. Depends on the relative tax rates and whether there is a tax owed in the resident state, because it's a non-refundable credit. So tax layer will determine all that once you have all the inputs in correctly. Now, non-residents have to, of course, have North Carolina sourced income, but they also have to have a total federal AGI that's greater than North Carolina's standard deduction. And here's the North Carolina standard deductions below. So if I'm a single person and I only have 5,000 of income across the whole country, even if I have some North Carolina income in there, I'm not going to have to file a return. So you first determine what's their total income, and will that is that higher than the standard deduction, and then do they have North Carolina income included in that? As with the full year residents, you might have a situation where someone earns more than the North Carolina threshold, which for married filing jointly is 21.5, but below the federal threshold, which is 25.1. Not a high chance that you're going to find someone within that range and they have some North Carolina non-resident income, but that's the truth. And what we would do is just prepare both the returns and probably file them both. Now, a non-resident does not get any North Carolina deductions or credits. They don't get the child deduction and the Bailey pension deduction that we talked to in the full year presentation, full year resident presentation. They can't itemize deductions, and they don't get credit in North Carolina for taxes they may have paid to another state or country. You can only get credit in your resident state for that. However, the North Carolina taxable income for a non-resident is prorated based on the percentage of the total income they earn in North Carolina. So in some ways, they do get the benefit of some deductions in doing that. And this is all figured automatically. For example, if you have a single person who earns $5,000 of AGI in North Carolina out of a total of $50,000, then the North Carolina taxable income is $50,000 minus a full North Carolina standard deduction of $10,750 multiplied by the 10% that their AGI represented in North Carolina. So they would pay tax on $3,925. So you can see they're getting the benefit of some deductions even as a non-resident in the way that it's determining how much income is prorated to the state. And you'll see that when you look at the individual forms. Now, in some cases, and maybe even in many cases for commuters, for example, the income that was earned in North Carolina gets designated in the federal section of tax layer, such as in a W-2, gets put into the state tax section. However, sometimes a state isn't indicated. So if they're self-employed and they do some work in North Carolina and some work in another state, you're going to have to manually adjust and determine how much income belongs to North Carolina and how much doesn't. And the preparer is going to have to make entries then directly into the North Carolina non-resident return under a section called income subject to tax. And I will show you an example of that, and then you'll do a problem on it. When you do these adjustments, of course, you always want to make sure that any income that you entered for North Carolina doesn't exceed the total income that they had. So if it were self-employment income, you'd want to make sure that the federal amount is greater than or equal to the amount that was in North Carolina. Okay, so we're going to quickly give you a quick quiz. If you would pause this video, answer the questions below, and then restart the video to view the answers. Okay, let's take a look at the answers. So true or false, taxpayers don't have to pay tax on North Carolina income if they don't live there. Of course, that's false. Any income that they earn in North Carolina of certain types, meaning wages, self-employment, real estate related income, or gambling, is taxable in North Carolina. I may be eligible for a tax credit in my resident state for taxes paid to North Carolina as a non-resident. And that is true, but it does depend on the relative tax rates because the software will figure out how much tax you should have paid had it been earned in your own state versus in North Carolina. And it's also a non-refundable credit. So if you don't owe tax in your resident state, you can't get a tax credit for tax that you paid elsewhere. True or false, tax layer figures the income attributable to North Carolina automatically. Of course, that's false. You might have to specify in the software that the income that they got was earned in North Carolina. Sometimes it is in the federal section like a W-2, but other times you have to go to this section called income subject to tax. And true or false, non-residents are eligible for the Bailey pension deduction. That's false. Only residents are eligible for the Bailey deduction. However, in some ways, it doesn't really matter for a non-resident because a non-resident doesn't owe tax in North Carolina for pension income. It's only, even if they worked in North Carolina and they're now getting a pension, but they live in another state, they don't owe North Carolina any tax once they've left the state. Okay, we're going to stop here actually before we do this problem, and I'm going to quickly show you an example of a non-resident return. Okay, so this is Janice Evans and Carl Bryant. You may have done this problem last year, but they had a bunch of different types of income. One of the things that they had, they didn't live in North Carolina, but they did have some other income. And it turns out that the other income, when I get to that page, was for gambling. Everybody gambles on these problems, right? And they're no exception. So they had $1,000 worth of gambling winnings. So what I would do, and actually let's go to the input screens first. Okay, so we put gambling in under the less common income, and they didn't get a W-2G, but here's your gambling winnings that I put in as $1,000. Okay, now I'm going to take a look at the North Carolina return. So I've added a return that was non-resident. If you want to see how I do that, I'm just going to delete this. So we would add a state return, North Carolina. And we're going to add a non-resident return. You still have to go into basic information. And you will see that the county for a non-resident is called foreign. And that's just picked automatically. It doesn't mean foreign country. It means it's foreign to North Carolina. It's outside of North Carolina. So this will automatically come up when you pick a non-resident state, but if for some reason it doesn't work out, you want to select foreign. Again, in this basic information, there's some questions about whether they're a veteran or not. Doesn't really matter. It's just survey questions. But down below, unlike in a full year resident basic information, there are some additional boxes here. Now we said it was a non-resident, so it picked non-resident here. If this had been a part year resident return, which we'll get to in the next presentation, you would have to indicate beginning and ending residency dates. But given that I've chosen the specific form for non-resident, it already pre-populates all of that, okay? And then, as I said, there are certain things where it's not going to automatically come in as North Carolina income, and one of them is gambling. So there is in this non-resident return something called additions to income. And I will go into additions to income. I'm sorry, income subject to tax. Forget that. It's under income subject to tax. Federal income and losses taxable to or deductible from North Carolina taxes. So I'm going to go into income subject to tax. And then there's a couple options here, but this gambling is federal income subject to North Carolina tax. The labels are confusing. As you can see, I already kind of slipped up before this. But this isn't an addition to federal taxable income because this gambling income is already in taxable income. It's not a deduction from it. It's a part of the federal taxable income that's subject to North Carolina tax. So I'm going to go in there. And there are a few things that I could specify here. I cannot specify wages. It's telling me that there's wages, but it's already being coded that way in the W-2. So I don't want to enter additional information here on that. I don't have to worry about taxable interest or dividends for a non-resident because those are not going to be taxable in North Carolina. If I had self-employment income and I actually worked physically in North Carolina, then under Schedule C business income, I might have to put in a portion of that as subject to North Carolina tax. If I had real estate gains that related to something specifically located in the state, I would add in gains here, a portion of that. He had other gains, but they're stock gains. So they're not something that has a specific location in North Carolina. Unemployment compensation, let's say they receive that from North Carolina, but they live in South Carolina, that would be North Carolina non-resident income because it came directly from North Carolina. And then other income, which includes gambling. You'll notice again that it'll say that they had other income of 1,000. That was their total gambling. And I'm going to assume that 500 of that came from North Carolina. Of course, it would be a real situation, but for this problem, I'm going to assume they gambled over in North Carolina, okay? Hit continue. As with all the state returns, we don't want to just jump out of it. We've got to do different buttons back and continue until we can get to exit. Okay. Now we're going to look at the non-resident printout so you can see what that looks like. Okay, so this is the D400. It's the same tax return, tax form, but it's for a non-resident. And in fact, you'll see that right here. Were you a resident? No. Again, the first page is computer formatting. We go down to the same page you were used to seeing for the full year resident. We begin with AGI, federal AGI. In this case, it was 83,336. They actually had a qualifying child, so we take a full $1,000 off of there. So this is being figured as if they were a full year resident, even though we know they're not. But we begin at the top here by taking full year resident amounts. They get the standard deduction of $21,500. So they have a gross income on a North Carolina basis, if you will, of $60,836. However, only a portion of that was actually earned in North Carolina. And so this percentage 0.006 or factor is a part year resident and non-resident taxable percentage. So this is the percentage that's taxable in North Carolina. If you recall in the slides, I was showing you that there's a ratio of North Carolina income to total income. And so of this 60,000, only $365 is taxable. How do we come up with the 0.006? Well, there's a supplemental schedule back here called PN, D400 schedule PN, and it will show two columns. It shows all of the federal income, and then it shows all of the North Carolina income that's a part of that. So down here in other, where we had 1,000 of total gambling, only 500 came from North Carolina sources. So that's what you see there. So in total of the 83,359 of federal income modified by North Carolina adjustments, only 500 is North Carolina income, and that ratio is 0.006. So going back up here, you see, as I say, the 60,000 multiplied by 0.006 is 365 of North Carolina taxable income, leading to tax of $19. Okay, so that's what they owe in North Carolina. That's pretty much how this works. Now we're going to assign you a sample problem. Okay, so we're going to have you start with the King problem that you did for 2020 certification on page 110 of the NTTC workbook, and including the 2020 South Carolina supplement. Again, you don't have to re-enter this problem. You can, unless you really want to keep a copy of what you did, you can just go ahead and work from what you already entered. And we've got some additional information for you. Mr. King received the second stimulus payment of $600. Still didn't receive the first, by the way. That's how the problem was written. He also received, since he did get some unemployment compensation, he received the federal unemployment compensation exclusion, which, if you recall, is up to $10,200, came along subsequent to us doing all our training. But you should know that he has received it, and TaxSlayer should have it in there. His Allentown construction job was in North Carolina. I think that was actually in your original supplemental information. But something new here, he actually vacationed in the Blue Ridge Mountains, and he won $2,000 from the slot machines at Harris Cherokee Casino Resort. Didn't get a form for that. He also lost $500 the same day at the blackjack tables. Okay. So here are the check figures, and they're probably not the same as what you did the problem with originally, because I've made some modifications, but you should come out with federal AGI of $20,607, a refund of $23.65, a South Carolina refund of $208. So you'll have a South Carolina refund of $208. And you should be able to see a North Carolina tax owed of $23. Okay, so go ahead and pause this video and try to work this problem, and then continue the video, and we'll talk about the answer and show you the input screens and output screens. Okay, hopefully you found that pretty straightforward. Here are some things you should note. You had to add $2,000 of gambling winnings into the federal system, actually, because we didn't have that in the federal. And you have to add it into the North Carolina tax return under the income subject to tax, then federal income subject to tax, and then other income. So we'll see if you did that correctly as I go through that. You may have noted, if you haven't, you'll see it as we go through it, that there was an add back on North Carolina of 10,200 because North Carolina didn't adopt the federal exclusion. Only 27.75% of Andrew's income was taxable in North Carolina because that was the portion that he earned in the state from Allentown construction and from the gambling. Interestingly enough, because North Carolina adds back the federal unemployment compensation exclusion, that actually raised his non-North Carolina income, and so it lowered the prorated percent that he pays in North Carolina. Kind of strange. He owes $292 in taxes in North Carolina, but even though he owes money in North Carolina, he doesn't get a tax credit in South Carolina because it's a non-refundable credit and he doesn't owe any tax in South Carolina. So what I would suggest you do is anytime you're seeing this income credit for tax paid in another country or another state, you want to double check all the tax layer output to make sure everything is in there. Sometimes it doesn't pick up some of the income. So make sure that credit is right and adjust as needed. Okay, let's go ahead and look at the results on tax layer. So I'm in the state section of King. And you can see he has a non-resident North Carolina and he's a resident of South Carolina. So again, as I go into North Carolina, once you added a North Carolina return, it should have put under basic information that he's a foreigner. And so that should handle that just fine. And then because you have gambling, which doesn't automatically know which state it's from, especially if there's no form, no withholding, you needed to go into income subject to tax, and then federal income subject to North Carolina tax. Then you didn't have to put his Allentown wages here because it already knew that from the W-2 that was North Carolina driven. But down below here, you did have to put the $2,000 of gambling income into other income. Now it's interesting, it shows that the federal return has other income of minus 8,200, and that's because it had the 2,000 of gambling, but it had 10,200 of the federal unemployment exclusion. So that's a little confusing. You just need to know that you got to put the gambling into the other income amount. Okay. Now we're going to go ahead and look at the printout. Okay, so again, we have our D400, same form as the resident return. We have his AGI, which is 20607. We're adding back the 10,200 of the federal unemployment exclusion because North Carolina did not follow that. And even though this is a non-resident return, again, the beginning half of this, we're building it as if it is a North Carolina return, and then we're going to apply a percentage that really truly related to the North Carolina income. So we're adding that back into the base. Then we're taking his standard deduction. So he has 20,057 of income in the country. That's sort of the base. Now on that, only 0.2775, 27.75% is attributable to North Carolina. And how do we know that? Well, again, we're going to go down to the supplemental schedule PN. Went past it. You'll see that of his wages of 7,957, $6,757 was earned in North Carolina, and $2,000 of other income was also earned in North Carolina. So when I come down to the bottom here of the 31,557 of total income, only 87.57 was earned in North Carolina. That's 0.2775. That's how they came up with that number. So this amount is then multiplied by that, and he has a taxable income of 5,566. Multiplied by 4 or 5 1/4, he owes $292. So this 292 is potentially, that's what he owes North Carolina. And that could potentially give him a credit in South Carolina, but we'll see why that doesn't work. He actually had some withholdings, so his net owings is only 23, but he really did owe, he paid 292 of total tax in North Carolina. Now, one of the interesting things about the 2020 North Carolina return is because this unemployment exclusion came so late, they just injected a form in here to add it back. So you may have noticed this, that this is where the 10,200 add back came from, because North Carolina did not adopt it. Okay, that is the North Carolina return. Now let's see what happened in his resident state. Okay, so here's King's South Carolina resident return. And of course, it begins differently with taxable income. I don't have to go through all of that. But I want you to see that, and he was a firefighter and a lot of other things that related to South Carolina. But I want you to see that he doesn't have any tax credit here, non-refundable credit for tax paid in another state. And that's because he has no South Carolina tax, and it's a non-refundable credit. Further down here, there actually is a little bit of a worksheet on that. Credit for taxes paid to another state. Here's that 8,757 that he earned in another state, and the 292 that he paid to another state. But since he didn't pay any South Carolina tax, he can't get any credit for that. Okay, I hope that this gave you a good enough tutorial on non-resident taxes. But if you have any questions or any comments, please talk to your training coordinator, some of your fellow instructors, or you can email me at mdmawm@yahoo.com. Be curious to have your comments or any questions you have. I'll be happy to get back to you. Thanks very much for listening, and I hope you have a good season.